Hello, everyone. This is Matthew Frailey with BreakpointTrades.com. We've been bringing you advanced technical analysis, market commentary, trade ideas, and mechanical trading algorithms like you see here for over 20 years for individual traders and professional institutions. Okay, so let's go ahead and get started here. This is going to be a midweek update for May 18th, 2023. As you know, the market's at a nice two-day rally breaking out of the range it was in since I last talked to you guys. It's had a nice rally up right to the 4,200 resistance. So I'm going to get this started. I'm going to start the recording for our website subscribers. Hello, everyone. This is Matthew Frailey with BreakpointTrades.com. This is the Thursday, May 18th newsletter. As you know, Steve Nelson's out of town. He'll be back on Monday evening. As you can see via the newsletter, it's divided into five major sections. As far as the market, as you know, yesterday we finally broke out of that tight range that we've been in for a couple weeks. Had a nice rally, and today we had a nice continuation follow-through rally. And the S&P 500 closed right at that coveted 4,200 area that a lot of people are looking at. But really, the resistance. It's a zone. There's a resistance zone between 4,200 to 4,219. There's actually an open gap, unfilled open gap from last year. To me, that would be a magnet in the short term. Otherwise, kind of one of our longer term targets over the last 6 months has been the 61.8 fib on the S&P up there around the 43.25 area. Again, guys, we've had a lot of awesome trade ideas. Hope you guys are playing some of these. I had several new trade ideas a night and really amazing gains there. I implore you to try some of our trade ideas instead of just looking at the indexes. As far as tomorrow, Powell speaks. So if he says anything the market doesn't like, be aware of that. The market is short-term overbought. That could be a catalyst for maybe a little pullback short-term. And we updated the STS KISS tables. It's a link here in our newsletter. You can check that out. And you can check out a bunch of individual stocks, ETFs. And by the way, we had a lot of new smart trailing stops generated today. The KISS systems have done a phenomenal job, especially on the big cap tech. And that's what's led this year, as you know. Microsoft, Facebook, Meta, you name it. So let's get started. Item number 2 shows the index sector table what transpired today and this week. Again, you can see nice update for the market. Again, once again, big cap tech is leading this rally. NASDAQ 100 up 1.8%. Contrast that to the Dow, it's only up 0.3%. S&P up about 0.9%. For the week, nice solid gains here. Again, 1.8% roughly for the S&P, 3.7% for the NASDAQ. So again, we continue to see a few of these big cap stocks, Apple, Meta, etc., where they're just leading this market. It's been a narrow range rally. As far as the major market sectors, despite the nice update today, not all the sectors were up. Handful of ones that were down. Again, nothing down much, but some of the defensive areas money's been rotating out of, such as utilities, drugs, healthcare, real estate continues to be weak. Not surprising. Otherwise, nice gains for most of the other sectors, especially today what led with the semiconductors technology. Yesterday, banks, financials led. Now, currencies, US dollar, big rally today, up 0.75%. So now up 0.9% for the week. I've had a bet with a friend of mine who, for the last 2 weeks, has been insisting to me that the dollar is going to sell off. I said, no, the dollar is going to rally based on my charts, and I've been correct. And cryptocurrencies were down today, generally. So that's something that stands out, doesn't jive with the market. And commodities were mostly down, almost all of them down, except for natural gas, which was up almost 10%. But with that very strong dollar being up 0.75%, you shouldn't be shocked that the commodities sold off today. Precious metals have been getting hit. Remember, a few weeks back, we were starting to get short-term bearish on gold. Seasonality-wise, gold tends to be weak from about mid to early May until early July. We had a rising wedge pattern that we were showing on GLD. Plus, the dollar looked like it wanted to rally. So everything was lined up for seasonality, for technicals. And I welcome this pullback in gold because, guys, I think we're getting another great swing trade opportunity in the precious metals. So nice to see that correction. And today, 10-year, 30-year treasury yields rally. So rates continue to go up and the market's going up too. Next, item number 3 shows the economic news calendar. Again, tomorrow, remember we have Powell speaking. So before we get into the indexes, let's talk about the STS Smart Trailing Stop KISS systems. So this image here, item number 4, I just made this image here, and I actually posted on our website a link to a Google spreadsheet. But again, all these are in the STS table. So these are the trend systems, and I have a little basket here, kind of like a model portfolio. Let's say here's the SPY, and there's a couple of different ETFs for the SPY, UPRO and SSO, triple Qs, DIA, EFA. That's your world markets. And then a lot of these FANG type stocks, Microsoft, Apple, Nvidia, Meta, which are very widely held. By the way, the KISS systems have done fantastic for these. I mean, look at this. On Meta, the KISS system went long on November 15th, and it's been able to raise its stop 22 times. The current stop, so smart trailing stop, is at 229. Current price is 246.85, so it gives a little room. Nvidia 288.80 is the stop. Apple, which again most of you own, stop is currently at 164.70. Apple's at 175. All these other instruments down here are flat at the moment. Again, with the STS tables, you can check, hundreds of individual stocks and ETFs. This is just a small list of widely held names. Let's take a look at some of the KISS systems. So, item number 5, this is Meta under the KISS system. And look how damn well this thing is done. Now, obviously, Meta's been uptrending like crazy, but the KISS system actually went long back here in November, mid-November, and it sets a trailing stop. Smart trailing stop is what that means. And you can see it keeps it wide enough that it doesn't get hit by noise. So it allows the market to move up, but it gives you a protection. And look how many times it's raised. I think it's been able to raise its stop 22 times, constantly protecting those profits. The current stop on Meta is 229.10. So really nice. It got close to being hit right here, but it didn't get hit. Next, image number 6. Here's the KISS system on Nvidia. So here's an example of the KISS system. So, it went long back here in November. It then held into December, hit the smart trailing stop at 158.80. Price went down, but it was just a little pullback. Wasn't much, and the system rerighted itself. Went back long. Yes, it went back long, a little higher than where it got out, but that's fine. It righted itself, and since then, it's been at a rate constantly trail that stuff up all the way. Current stop on Nvidia is 288.80. Next, chart 7, here's Microsoft. It went long back here, basically February 1st, and it may look like this pullback here. It did not hit the stop. It broke the ATR there, but notice it did not hit the smart trailing stops, and trailing that stop up as well. 299.80 is the current stop. Next, chart 8, here's Apple KISS system. It went long back here in January, and it's been able to raise its stop, a good 20 times or so. It raised its stop today to 164.70. Yesterday it was 161.80. The nice thing about these KISS systems, guys, is that I know a lot of you are still nervous about the market ultimately, and that's very understandable. But the KISS systems allow you to be long these instruments with a peace of mind because you have a trailing stop that is constantly ratcheted up. Smart trailing stop. So very useful resource from Breakpoint Trades. You should use it. Anyway, let's get back to the general market. Image number 9, here's a daily view of the major indexes. So we'll look at the indexes first. So here's the Dow at the top. Slight breach of this little downtrend line here, not a strong breach. Up here is your longer resistance. Remember, the Dow is lagged this year. Last year it led, this year it's lagged. What's led this year is the NASDAQ. Here's the S&P, closed right at the 4200 area. Took out this little horizontal resistance, but again, you have a right around this 4200, and there's a open gap back here in August 4219. It would be my very short-term target. We'll look at that more below. The Nasdaq busted out here again. As I stated, this wedge was more of a bullish wedge because it wasn't very steep. So just from an educational standpoint, guys, and it's something I've learned over the year, to me, rising wedges that are bearish need to have a steeper slope, kind of like this. When the slope is too flat, they're more often to break up instead of down. So just a little tidbit, something I've learned over the years. And at the bottom, the Russell, as I've stated, to me, if the market holds up, this has the most catch up to do with the market because it's been the most oversold. Next, moving back to the we're going to move to the S&P now, or a proxy. So here's the weekly view of the S&P. Again, obviously no changes on the weekly. So far, this week we're up 1.8%. Like I said, over time, this summer, perhaps we're targeting this upper channel, maybe this 38 or 61.8 fib up here at 43.25-ish this summer. Next, chart 11. So here's the weekly KISS system for the S&P. One of you asked me to update this. I don't show the weeklies that often. So the weeklies give a lot wider stops, as you know. You can see the KISS system. Again, it done well. Back there in early 2020, it was able to avoid that big sell-off in February, March 2020. It got back long and stayed long all the way until January 2022. Last year, it was mostly in cash. Did a long here in July of last year. It actually got out here at 40.50. It's actually made money on that. And it got in back here in early January. And it's been long since. Again, the stop is really pretty wide on this puppy. Not necessarily something I'm interested in trading at in this type of market of a stop that wide, but that's where it is. And these little system trades here, you can see some shorts, some longs. These are not the KISS system. There's some of my reversion to mean trades. You can see they're pretty useful too. Next, chart 12. Here's a zoomed in daily view of the S&P. Again, as you know, price was coiling, which I talked about. We finally busted out of that range yesterday. Big follow through today, closing a little bit through this horizontal resistance. You also had a little buy signal on this RSI trendline break yesterday. MACD's trying to crossing up here. Next. Chart 13, here's a 60-minute view showing that tight diamond pattern or a coil. Again, we started breaking that yesterday, so not surprising we had to follow through today, and we took out this little horizontal resistance. No MACD divergence on the 60-minute chart. Next. Chart 14, here's a zoomed out daily chart. So again, I talked about how the S&P closed right near this 4200 resistance area. Zone. It's a zone because see the horizontal lines? You got an open gap back here in August at 42.19. To me, that would be a magnet short term. Some other targets would be this expanded coil trend line up here, this other channel up in here, the 61.8 fib up here. Again, I don't think we're going straight up to there, guys. That pull back. But short term, let's see how price handles this resistance zone and if we can smash through there. Next, chart 15. Here's another. This is another daily chart. Actually, this is a half-day chart. This focuses on that expanded coil. So one also short-term target could be tagging this upper trend line of this expanded coil. So that's something we'll be watching. Next, chart 16. Here's a 60-minute view. As you know, we held that uptrend channel. We broke out yesterday. We initially stalled at this little supply zone, and then we broke through it late in the day. Again, the positive is here we have no negative divergence in the MACD or anything. Next. Chart 17, here's UPRO. That's the 3-time leveraged ETF. So, this is the way I prefer to play the market. Usually this or SSO, but this could be a place for a trailing stop at the moment. Next. Chart 18, here's the 15-minute chart. Like I said, out of contraction comes expansion. You had a lot of consolidation, contraction over a couple weeks here. And when you have that, once price finally breaks out of that, you have a strong move, which we've had. A little bit of potential MACD divergence setting up here for now. Finally, chart 19, here's a 5-minute view showing the intraday action. So yesterday we broke out over this resistance, had a big rally up in the afternoon, essentially formed sort of a bull flag late in the day. It was too late for the market to break out. It then broke out this morning. It pulled back. Now here's another education, guys. In uptrends, I look for 3-wave pullbacks, A, B, C, roughly. When I see a 3-wave pullback like that in an uptrend, okay, and then I get a reversal, I buy it. So this is something I'd buy right here, put a tight stop. This was an excellent intraday setup, and then we had that nice power rally into the afternoon. Next. Chart 20, here's the daily KISS trend system for the S&P. Again, surprisingly, we didn't get a new smart trailing stop here. My guess would be we'll probably see one tomorrow. Next. Chart 21, here's the 4 time frames we like to follow. The one thing I want to point out, price took out these resistance cycles, etc., which was considered a breakout. Next. Chart 22, here's the triple Q's NASDAQ. Again, we've had this rising wedge drawn in place for a couple months now. We favored a move up here in 05, and we're pushing right through here. We took out this little supply zone, pushing right up. Now an area to watch is this upper trend line. Next. Chart 23, here's the weekly view of the Qs. Also shows that where the 61.8 fib is. Not too far away from there. That could be hit pretty quickly. That's much closer to that than the S&P is to its 61.8 fib retracement from the 2021 highs. Next. Chart 24, here's the triple Q's KISS system. So despite today's big rally, we did not get a new trailing stop today. We got one yesterday. It's at 319.40. Again, that was a nice jump, guys. That was an 11-point jump yesterday from 308.40 to 319.40. But if we're up tomorrow, I could see we'll probably get another trailing stop. Next. Chart 25, here's the 2-hour review channel I've been showing. Like I said, we held that channel. Now we're rallying up. One potential target could be the upper parallel channel line here. Next. Chart 26, here's 60-minute view of the triple Qs. Again, kind of like my comments here, guys. You had a little wedge here, but rising wedges are not always bearish. If the slope is too flat, I call flattish, if that's a word, more often than not, you'll break up instead of down. Okay, more often you'll break up. To me, wedges that break down more often, they'll be, draw this in here. They'll have a stronger slope like this versus a more flat slope. So that's kind of an example of some of the subjectiveness of technical analysis that's difficult to program into a computer, something like ChatGTP, guys. But our visual brains can see this easier. Anyway, next. Chart 27, here's the 4 time frames. So here it's more obvious than the S&P. Remember I talked about these resistance cycles, the cyan dots? I said, price will often respect these cycles, and then once you finally break through a cycle, that's a breakout, a wave 3. You can see how that occurred. Price clearly broke through this resistance cycle here, 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 and here. That was a breakout. Okay, those are bullish. You chase those breakouts. Next, chart 28. Here's IWM small caps. Again, this has been our labeling A, B, C, D, and I should label it here, but so technically we're looking for possibly a wave E up, and then eventually maybe later in the summer you would come down again. So again, where would a swing stop at the moment go now? I'd put it right there at that higher low if you're long IWM or one of the ETFs for it. Let's clear that out. Next. Chart 29, here's the weekly chart. Again, shows you the same big coil here. This also is another great example. I talked about it last night to my subscribers. So And if you look on YouTube, you'll see a lot of videos on supply and demand zones. But this is a great example. This is a big demand zone. Again, this is a weekly chart, guys, going back to 2019. But this is a demand zone. You can see how every time price came into this demand zone since last year and this year, price has rallied off of it. This was a supply zone. So in early 2022, when price rallied to it, it became resistance, just like this supply zone, where there's good short opportunities. Next, that does it for the general market. Let's look at some indicators. Chart number 30, here's the VIX volatility moving down with the market. Now there is a demand zone here and the lower Bollinger Band. So this could be an area where if the VIX gets down into here, it then could be set up to bounce. Or if the VIX closes below its lower Bollinger Bands and then back inside, that would be a VIX Bollinger Band sell signal. By the way, look how good this VIX Bollinger Band buy signal worked here when it was outside the bands, closed back inside. That was an excellent buy signal, wasn't it? Next, chart number 31, here's the S&P low volatility index. This one on a buy signal 2 days ago on Monday when it was below its lower Bollinger Bands. Again, it's not perfect, but you can see examples. You get your buy signals when it's below its lower Bollinger Bands, your sell signals when it's on its upper Bollinger Bands, but that ended up being a great buy signal. Next, chart number 32, here's the put call ratio. Now guys, stock charts for whatever reason is very slow to update this chart. It's 8 p.m. here, it's still not updated, but this still shows yesterday's prices, but it closed at 0.8. So it's way down here now, guys. In fact, yes, it's below its lower Bollinger Bands. That is extreme warning, okay, in the short term that we're quite overbought. So it's closed down in this area below its lower Bollinger Bands. So complacency is high. Be aware of that. To me, that's my most concerning very short term. Next, chart number 33, here's the PMO system. Remember I discussed this, your buy and sell signals. Buy signal, this occurred last week when you had the big up candle off the zero area. It's been a nice long so far. Next, let's follow up with the market sector. Chart number 34, here's XLK. Again, this area has been leading. Again, it's highly concentrated. 3 stocks make up 50% of it. Up 2%, closing slightly above this wedge. Next, chart number 35 is the semiconductors. Hell of a rally after breaking out of the downtrend line this week. Look at that. It's back to the highs now. Next, chart number 36, financials, also following through, closing above these moving averages here. Next, chart number 37, bank index, also closing up a little bit. We had a nice MACD divergent low down here. This area was really oversold. To me, follow through, this 50-day moving average would be resistance. Next, chart number 38, regional banks. Again, they've had a nice rally off the lows. They're above their 20-day moving average. Well, now we'll see if we can make it up to our 50-day moving average. Next, chart number 39, KRE 60-minute chart. On Tuesday, we showed an inverse head and shoulder pattern. We warned about shorting this thing, and this has played out nicely on the long side. Next, chart number 40, here's the monthly view of KRE. Again, last week I showed how KRE had perfectly back-tested that monthly trend line. It bounced right off it, and that demand zone was a good area to go long. Next, chart number 41, transports breaking through this downtrend line. Next, chart number 42, industrials still coiling here. Again, you could have went long here, put a stop right there at that lower high. Still hasn't broken out of its range though. Next, chart number 43, materials trying to hold this support here. Volume looks okay. This would be, if you wanted to take a shot on the long side, you could put a stop right there at this point. Next, chart number 44, retail. Still hasn't busted out of this. It's closed right on resistance here. Next, Chart 45 XLE, so far holding this trend line. Again, if you wanted to be long the energy, you could have a stop right there at Monday's lows. Next, chart 46, the bullish percent energy index, BPDR. As I stated yesterday, this had come down into this oversold area on Tuesday. That's an area where it's low risk area to start scaling into some energy stocks. When it's up here, it's the time you want to start getting out of the energy stocks. Next, chart 47. Here's the BPDR Rinko chart. It's hard to see, but it actually went on a buy signal today via that parabolic SAR right there. Nice clean chart. Next, chart 48, ExxonMobil. I mentioned this the other day. I took a shot at this myself the other day. It had lost its 200-day moving average on Friday. Then on Tuesday, it regained it. So now we'll see if it can hold above it. But it was worth a shot there. Next, chart 49, K-Web, Chinese internet. With its strong dollar, this area is obviously weak. Still hasn't busted the pattern down, but that strong dollar is not helping it. Plus, the stochastics got overbought here short term. That's not good. Next, moving on to commodities, chart 50, DBC. This is the weekly chart, still up 0.3%. Again, longer term, it's still in this downtrend from June highs of last year. You also have the 200-week moving average approaching. Next, chart 51, crude oil stalling so far at the 20-day moving average here. Longer term, if you can get above that, your big resistance is the 200-day moving average. Next, chart 52, natural gas. I've been talking about this beautiful base forming, and it finally busted out of here. I really like these basing patterns. You can see, look at the moving averages ribbon. It's pinched. Whenever it's pinched, energy is pent up like a coiled spring. Next, chart 53, here's the Boyle, one of the ETFs. Big move up today of 17%. It's a way to play it. Next, chart 54, copper, still struggling, trying to hold this little downtrend channel line for now. It is below its 200-day moving average, though. Take note. It was resistance here, and it lost. It became support, and it lost it here. Next, chart 55, there's the weekly view. Again, it stalled early in the year at the 61 fib. Right now, if it does go lower, we have the 200-week moving average to watch. Next, chart 56, here's the 10-year treasury yield. Overall, it's in a larger channel pattern. Had a coil within the channel, which it broke out on Tuesday, and its rates have been moving up. Next, chart 57, there's the weekly view of the 10-year treasury yield. You can see how price found support at the 50-week EMA. MACD had recycled back to zero, trying to curl up here. Next, chart 58, here's TLT 20-year bonds. Again, bonds have been working lower, rates have been working higher. Next, chart 58, high yield corporate up today, but this, if you want another little coal in the canary in the coal mine, this is it. If high yield corporate doesn't start to rally, that will put this market rallying suspect, because high yield corporate bonds move with the S&P, and when they have divergences form, that's when you start getting problems. Next, chart 60, here's the comparison. Again, look at this. I need to redraw this trend line, but the S&P is making a higher high. This has a strong lower high. And again, high yield corporate tends to lead, so be aware of this, guys. That's definitely a little short-term warning. If this is not reversed, then, market could go up a little more and then have a pretty sharp pullback and trap some of the recent bulls. So be aware of that. Next, chart 61, Bitcoin. It was, like I said, weak today. That's another little warning, short term. Next, chart 62, BITF, one of the Bitcoin stocks. Now this was up today, or it's been up the last couple days out of this wedge. Next, chart 63, US dollar ETF, broke out of this coil pattern last week. Nice rally, 200-day moving average is approaching. Next, Chart at 64, here's the US dollar index. Again, it rallied, it found support off this demand zone. Another great example of demand zone. Took out the downtrend line, took out the 50-day moving average. So that's helping dollars sell off, commodities sell off. Next, let's move to precious metals. Chart at 65, gold. Weekly view down 3%. Remember, gold was right up here at this resistance, guys. Boom, boom, boom. Now, I'm not bearish on gold. I like this pullback, right? I would love to see something like this and then boom, a big rally breakout later this summer. That's my favorite scenario. Next, chapter 66, gold daily. We've had it drawn in a rising wedge pattern for a couple weeks. We pointed out the MACD divergence at that last high, and this pullback is playing out. I need to add an uptrend line here because that could also be a target here. Next, chart 67, GLD, ETF, same analysis applies. You can see that divergent high. Here I have the channel. So, and I also added fibs here from that recent March low, February low. So this uptrend line channel could be an area to watch for support, as well as that 50% fib. Next, chart 68, another daily view of gold. This one has the channel. Next, chart 69, silver. Nice breakdown from that pattern and divergent high. Next, chart 70, GDX. Nice sell-off in GDX. Today it tagged its 50% fib retracement. And for now, I'm viewing this as a three-wave ABC pullback. Not sure. I don't think C is necessarily done. 50% fib, 61.8 fib. If it got down to the 61.8 fib, I would definitely take a shot long myself. That would be a good spot. And also I drew an uptrend line here. So those are some areas to monitor over time. Next, chart 71, here's another daily chart of gold showing the ABC. Also showing trailing stops. If you were still long, you would have been stopped out the other day if this higher low was taken out. But again, today we tagged a 50% fib. Here's the 61.8 fib. I do believe this is some sort of ABC pullback. Next, chart 72, here's the 2-hour view. Nice sell-off after breaking this trend line. One thing I'm watching is this trend line on the GDX-GLD ratio. If it could break that, that might be enough trigger for me to take a long. All right, guys, let's move on and talk about the bread and butter, the trade ideas. That is what has been making the money here for me anyway. And that's why I implore you guys to try our trade ideas. So here's Amazon, long idea from a couple weeks back. Nice pop out of that trend line. Trail your stops up. Next, chart 74, Netflix. I posted this morning when it was up a little bit, and it had a huge move up intraday. So anyone who caught that, congrats. Tested this high. Nice move out of this coil as well. Perfect break out of the coil, back test of the coil. Just absolute textbook. Next, chart 75, Plantier. This was a long idea, a new one that I posted yesterday in yesterday's newsletter. I said it, cup and handle. Beautiful volume. Look at that volume. Just absolute textbook. It gapped up today. I bought the gap up, and it was still one hell of a move. Up 14.5%. Congrats to those of you who caught that. Next, chart 78, Charles Schwab. I posted this in the morning as a coil, and it broke out today, as you can see. Next, chart 77, newer. This was a long idea of mine from last week, and on Monday it broke out big time yesterday. Hell of a percentage of move, hit our target. Congrats to anyone. Basically a news item came out. A group offered to buy this company out, and that's why it's popped so big. But still, the setup was just perfect resistance here, just all lined up beautifully. Next, chart 78, AI. Yes, AI has not taken over my analysis position, guys. I don't think it ever will. At least I think I'm better than AI at doing this stuff. But again, hell of a rally off this 200-day moving average. Little profit taken a day. Not surprised. It's had one hell of a move here in the short term. Next, chart 79, CRM. This was a long idea of mine a couple weeks ago. Resistance was 200. Really nice move. Again, just trail the stops up. Next, Jabber 80 IONQ, long idea from last week and on Monday. Look at this power move, guys. Take your profits. Hell of a move. Next, Jabber 81 AMD, another long idea of mine from last week on this downtrend line. And look at this. Took out the recent high here, now into this little supply zone. Hell of a move. Next, Jabber 82 XMTR. This was long idea back here, and we were watching to also buy this back here on the back test, which it gave us a trade yesterday. Next, Jabber 83. Here's the 60-minute chart I posted yesterday. Remember I said in uptrends, look to buy three-wave pullbacks. You had a breakout uptrend, 1, 2, 3. That's something you buy here. So broke out of the little channel here. Little pullback today, but to me it looks fine. Next, Jabber 84 McDonald's. This is one that I put out as a short on Monday, as a coil, and it played out. But notice it came to the demand zone. This is where you should have taken your short profits, and it rallied off of it. In fact, off this demand zone, you want to look for a buy opportunity. You got a perfect trigger off this doji. You could have put a stop right at the low of that doji. Just excellent. Next, Jabber 85, there's the daily. Next, Jabber 86 KB Homes, another long idea of ours from April. Just continues to work higher. So the dotted lines show kind of trailing stops like the KISS system. So just trail your stops up, just like this. Trail them up until you get stopped out. Next, Jabber 87 UXIN, long idea of ours from a week and a half ago. Resistance was $1.20, rallied up to the 50-day. We bought it back here near this support and rallied back to it. Now, if it can take out this 188, I think it powers up to this next level. Next, Jabber 88 Canoe, another one we've been monitoring. It's testing the downtrend line here now. Little low price stock. Next, Jabber 89 Omar, one that technically broke out today, came back in. Again, that happens with trading, guys. Not everything's going to go according to plan. Again, this is where you have to decide what you're going to do. You know, to me, if you're swing trading this, even though this is unfortunate, it's not a reason really to stop out and take a loss here. I'd probably put a stop here below the moving averages or right here if I'm swinging it. Now, if you're day trading it, you might have just exited today as it came back in. Depends on your style. Next, Jabber 90 SPCE, another one that tried to trigger today, closed right, just right back to the resistance, but it still looks okay. Next, Jabber 91 FedEx trying to break out of here, pulled off the highs. Next, Jabber 92 MREO, another one, little low priced one I showed last night, triggered, pulled back. I know at least one of you bought this, got trapped in it. I actually bought some and got trapped in it too. Okay, I'm not perfect, but again, you have to decide where you want your stop. You could put it here, you could put it around these moving averages. And guys, also, this is a low price stock. These low price stocks are very whippy. So even if you got a small account, don't just trade these little stocks because you'll get frustrated. Try to trade some of the bigger stocks, even if you can't buy many shares. They trade a lot easier than these little things. Next, looking at some setups we're still monitoring. So here's Halo, still monitoring this potential pennant flag. Next, Jabber 94 Jets, that's the airline ETF. Got a horizontal resistance here we're monitoring. Next, Jabber 95 PXD, it's an energy play. One of our astute members posted this. I really like this potential falling wedge here. Got MACD divergence. This would be a symmetry target. Next, Jabber 96, here's the daily. Note, its price is almost pulled back to the 61 fib. So that's an area where I want to watch. All right, guys, we'll see what happens tomorrow. Futures are up a few points tonight. But again, tomorrow could get interesting. And a couple things that stand out to me are the low reading on the CPC and the fact that high yield corporate bonds are not participating. So that does give me some concerns, despite the fact that the charts otherwise look okay on the indexes. All right, guys. That'll do it. We'll see what happens tomorrow. Have a wonderful evening, and thanks for all your support. Take care.